Welcome, dear traders. You are watching a recap of the Asian session. Stocks traded mixed in the morning. Japanese and Chinese equities declined, while Australian and New Zealand ones rose. In Australia, stock indexes have been moving up for 7 sessions in a row. Nevertheless, demand for the risk-sensitive assets decreased today. Futures on the US stock indexes also sank. Trading floors have resumed work today after a long weekend. This is why there might be a surge in the volatility in the American session. Investors remain cautious even after the Fed skipped a rate hike. The fact is that Jerome Powell hinted at the chance of 2 more rate increases this year. Besides, the majority of speculators are betting on a hawkish move at the July meeting. Inflation is still above the 2% target and the labor market remains tight. For this reason, many Fed policymakers backed a rate hike in July. On Wednesday and Thursday, Jerome Powell will testify at the U.S. Senate Banking Committee. New York Fed President John Williams and the Fed Vice Chair Michael Barr will give speeches as well. Perhaps their comments will give food for thought. So far, analysts believe that the central bank will keep interest rates at a high level throughout the year, and the US dollar resumed an upward movement amid hawkish comments from Fed policymakers and the expectations of a rate increase. It has maintained an uptrend for the third session in a row versus its rivals. It's also up amid fragile demand for risk assets. In order to cement the bullish trend, the greenback needs to jump above 103.10, the support level that turned into resistance. And now the support level is located at 102, which is the monthly high of June 16. In the Asian session, the greenback approached 102.5. Its rise in the range of 102.40 and 102.60 looked more like a consolidation. This is quite logical. Before opening new positions, investors are anticipating the new comments from the Fed officials. Bank of Japan policymakers do not usually reveal too many details. Japanese Finance Minister Shunichi Suzuki said that currency levels should be set by markets reflecting fundamentals. Expansive volatility is undesirable and it should move stably. He provided no comments on the yen's movements. Trade and Industry Minister Yasutoshi Nishimura also spoke in favor of stability on forex. Surprisingly, vague comments from Japanese officials stirred up demand for the yen. In the Asian session, the dollar-yen pair slid into the bearish channel of 141.5 and 142.20. After hitting the annual high above 142, the pair retreated to 141.80. Despite a rebound, the yen is still weaker than the US dollar due to the widening gap between Treasury note yields. Besides, the Fed remains hawkish even after skipping a rate increase. The uptrend channel that was formed 7 weeks ago may attract new buyers. Although Japan's economy is recovering at a moderate pace compared to other leading countries. And the Bank of Japan monetary policy is the main reason for the depreciation of the yen. News from China also shapes market sentiment in the Asia-Pacific region. Not long ago, U.S. Secretary of State Antony Blinken met with the Chinese President Xi Jinping. These talks may be the first step towards easing the mounting tensions between the two countries. Analysts are sure of more bilateral meetings and a summit of heads of state at the end of this year. The Chinese economy, which is unable to start a steady recovery, will definitely benefit from it. The Chinese government is trying to accelerate the slow economic revival after several years of restrictions. The central bank has already cut the benchmark lending rate several times. However, it did not adopt additional stimulus as many analysts had expected. Earlier, the government pledged to take extra measures to stimulate economic growth. However, so far there has been no stimulus. The yuan fell, dragging commodity currencies down. In the Asian session, the Australian dollar dived to 0.6810. After that, it settled in the narrow range of 0.6788 and 0.6857. The Aussie is declining not only because of the disappointing news from the People's Bank of China and the likelihood of a rate hike by the Fed. The Reserve Bank of Australia's unclear plans for monetary policy are also widening on the Australian dollar. In its minutes, the regulator explained why it raised the key rate at the meeting on June 6. However, it did not provide any details about further plans. Reserve Bank of Australia Deputy Chair Michael Bullock also did not specify what to expect in the future. She said that employment and the economy need to grow below trend for a while. This uncertainty limits the upside potential of the Aussie. On Tuesday morning, the support level of 0.6885 turned into resistance. Bears continue to push the Aussie to 0.6760. After reaching a three-week high of 0.6247 last Friday, the New Zealand dollar retreated. In Asian trading, it fell to 0.6170. In addition to external factors, the Kiwi faced bearish pressure due to the downbeat consumer confidence data. The New Zealand Treasury blamed high interest rates for a drop in this indicator. The economic prospects are also rather grim as the economy has slipped into recession. It's hardly surprising why bears are in control again. In the Asian session, the New Zealand dollar was moving in the downward range of 0.6161 and 0.6210. And that's all for now. Hit the subscribe button and stay up to date with the latest market news. See you soon.